Hey everyone, welcome back. Hope you guys are having an awesome Tuesday. This is Drawbridge Finance. My name's Levi Woods. It is Tuesday today. We are getting into some trading and I am welcoming your questions. Today's the public chat. So Thursdays I do my patrons only chat. Today on Tuesdays at 11 Pacific Standard Time, because I'm on the west coast of Canada, I do a public live stream. It's mostly about option trading, but I'll talk about anything. I'll dive into your questions. So just ask in the chat. And please let me know what you are looking at. And otherwise, we're going to go over a few things today. One of the things that I've been working on quite a bit lately is zero DTE trading. And I have developed a very, very cool spreadsheet that I'm going to be releasing to my patrons here in the next 2 days. This is the monthly digital download that my patrons receive. Every month I create some sort of digital download that it helps. It's like a tool for traders. That's what I do. I build tools in Google Sheets to help people analyze data. And this one I'm super proud of. It is very, very cool. Please let me know if this is working. I'm a one-man show, so it would be great if somebody could just let me know in the chat everything is good. Andrew says hi from Mississauga. Hi, Andrew. Thank you for joining as always. I'm going to jump over to the screen. This is the little spreadsheet that I'm working on. Now, this is crazy, bonkers town. You can see what I'm doing is I am building profit loss charts. And the idea with zero DTE trading, one of the theories behind it is we capture as much theta decay as possible. And there's multiple different ways to do this. There's people that take a directional stance and they're looking for a swing one way in the market. There's trades where we put on like an iron condor where we're getting a small credit and we're risking quite a bit, but we have stop losses that'll kick us out. I was doing that for a while. I found the slippage in IBKR to be not fantastic for zero DTE trading. And because of that, I was trying to figure out ways where I could do less adjustments. I wanted to do less trades, have less risk, and see what might transpire. Now, Tasty Trade, or Tasty Live, as they're now changed their name to, have also been doing some zero DTE trading because it's very popular right now. One of the things that they did about a week and a half ago was a little best zero DTE strategy, which was a butterfly. And butterflies are fantastic strategies for zero DTE because they have massive, massive theta decay. One of the problems with butterflies is that if they move, you can lose rather quickly. And what I wanted to do was take some of my knowledge about adjusting and say, well, how can I apply a butterfly strategy to like an iron condor strategy? And is it possible on a product like SPX, which is cash settled, to build a profit tent that is just ginormously complex? I don't even know if that's a word, but I got to work, and what I did was I built a spreadsheet. Now, we talk about multi-leg positions. Well, this spreadsheet will handle up to 124 legs. The idea with it is that you can just grow this trade to an infinite size, and it will keep, well, not infinite, it is limited to 124 legs. When you do this type of trade, there is no getting out. So you cannot kind of combo your way out of it. What we have to do is let the trade expire. And so there's products like SPX, which are cash settled, so they make it perfect for this type of trading. I'll show you yesterday's chart because there was way more trades. Today, I was able to make a free trade relatively quickly. But yesterday, I'll just kind of delete some of the data that was on here, and you'll see what happened with how I played yesterday. So I started the trade with just a very simple iron fly, which I was thinking that the market was going to go up yesterday. So I actually bought 2 calls, and I was completely wrong. But this chart gives me the ability to do that. I can look at my profit loss chart at expiration. I can see my break-even zones. I can see how much the calls are going to make and how much the puts are going to make. I also can see my net opening credit up here. My net closing credit. At this point in the day, I hadn't done anything, so there was no closing credit. And I can track where the stock is actually moving. Now let me just put these trades back in here for a second. You're not going to let me do that. There we go. So when I put in my second trade, what I did was I put in another fly, and I was able to adjust the positions Let me just delete that one more time here. Let me show you what this looks like over here. Because I am kind of trying to demo this, and this is not the final spreadsheet. These sheets take tons and tons of time to kind of tweak. But basically, this first trade that I put on, I was long a put at the 39.45. I was short the 39.95. I was short a 39.95 call, and I was long a 40.45. I was long two of those. You can see what my transactions were, the opening fees, my net credit. And then if I was choosing to close it, which the intent with trading SPX 0DTE is not to, I could enter that information here and it would calculate that up and it would show the net closing credit. What it does is it tabulates all these and it gives you the position just like you would normally see in the option chain. You could see that I have one long put, I have a short put, I have a short put at 39.95, and I have two longs at 40.45. Then what it does is it calculates the credit collected from the calls and what the profit loss would be at expiration. And it calculates the profit loss at expiration of the puts. Then it does the cumulative. It tells me at this point that my potential max loss within the range is $2,596. What I wanted to do was put on a new trade, and you can see this trade that I put on. I'll just show you at at 10 o'clock yesterday. I didn't actually put a timestamp in here, but I adjusted this. The market was down 39.80. I had told you already I was wrong. The calls, the two long calls were not worth anything because I was directionally incorrect. But I put on another butterfly. I bought a 39.20. I bought a 39.20 put for 42 cents. I sold a 39.70 put sold one of those for $9.68, paid a commission, $9.66 collected. I sold a 39.70 call for $12.36, and I bought a 40.20 call for 42 cents. What I'm really interested in is what does it look like? What is my potential? So you can see here, I've still got a potential loss. I've increased it now to 5,482. It's the same on both sides because this is two iron flies working together, and I have a max potential profit of 2,076. 2017. Where do we get that number? Well, with a fly, we know that when we have two flies and the stock lands in between here, I'm going to pay a $2,500 debit. Well, I've collected up here $4,500. So if I have to take $4,500 and pay out $2,500, how much money am I going to have left? Well, I'm going to have 2017. The cool thing about this is I built a little close button in here. So what you can do is you can simulate the close and it will calculate based on where the current stock price is. So let me just pull that up. Basically, it will simulate that the close profit was 2017. Now, I didn't actually do this. What I wanted to do with this whole thing was I wanted to take off some risk. So later in the day I can't remember, it was around 11 o'clock or so. I posted this in my Discord, but when the market was down at, not that price, I recorded that incorrectly, at 39.83, I bought two 39.65 puts and I bought two 4,000 calls. I paid, $458 and $446. What this did was it dropped my net opening credit down, but it added protection. Now it's kind of hard to see in this chart, and this is way better. This is really why I built this thing, is so I can see this particular chart. It's way better than IBKR's, and I'm tweaking this a little bit more so it centers. One of the problems right now is that it's showing this massive potential gain. Like, I don't expect to make $49,000 profit because I don't expect that the market yesterday was going to rally up to 4,200. It's unrealistic. What I need to do is recenter this. I had built it off to the left, but I think it'll be better to be centered like my charts usually are. But in this case, by doing that trade, by giving back this $1,000, I was able to lock in a minimum profit yesterday of $110. Now, what this does is it allows me to just sleep well. Like, I went out for lunch with one of my patrons yesterday. Hey, Rich, I hope you're watching today. We had a fantastic lunch, which was awesome. We got to enjoy the sun and some great Indian food, which I love eating, as you guys know. But while we were sitting there having lunch, this trade closed for a nice tidy profit. I had a really, really wide range from 39.70 to 39.95. And we know that yesterday, if we click this close button, click to close trade, it's going to pull up the price of the closing price of SPX yesterday, March 27th. It's using this input to pull the closing data, and it calculates all of the profit loss from each of the legs. So you can see this is actually a really low probability trade. Of the 5 puts that I opened, 20% of them won. 1 out of 5 was a winner. My net profit for the put side, do I have that on here still? Yes, I do. Right here. I've been moving stuff around. This is the net profit from puts. This is the net profit from the calls. So the calls, I only had 2 out of 5 of them win. They were the short calls, of course, the ones that expired. So I had this short call expire for profit. I collected $1,234, and at the end of the day, I had to give back $753, leaving me with a result of $481. And then my other profitable call was this guy right here, the $39.95, which also expired worthless. I collected $11.47. I gave back nothing because it expired worthless, so I made a profit of $11.47. The calls that I bought, they were all losers. This $446, that money was gone. This $448, gone. $43, gone. You can see these are totally trades that I'm throwing away money, but what I'm doing is I'm limiting my margin, I'm limiting my overall risk, and you can see my chart even says right here, it says, congratulations, you just took off all downside risk. So let's look at what happened today. Today was way simpler. The stock didn't move, or the market didn't move at all. It kind of floundered around. I looked a couple times. I wanted to put on a second butterfly lower. I wanted to put a second butterfly on a little bit higher. I opened up this trade at 39.67. I made the adjustment when it was trading at 39.66. So only a dollar difference. And this was around 10 a.m. So this one was opened at 6:32, which is just 2 minutes after the market opened. And then around 10 o'clock, I made an adjustment. But what I did with this is, you can see, congratulations, you just took off all downside risk. The minimum profit that I'm going to make on this trade is $304. So and you can see it in either chart form. If you look over here, whoops, wrong button. If you look in chart form, you can see the table. If the market closes at 39.10, the calls will have made money, 11.48. The puts will actually have made money because these long puts that I purchased this morning will actually close for $156 cash settled. My cumulative P&L will be 13.04. So right now, when we look at what the market's doing, it's trading at 39.54. If it was to drop way, way down, I would actually make some money. This will actually make some money to the upside. This chart continues up like this. What else can I tell you? I've got a built-in hedge and I have no loss. And if the market swings back up to around 39.65, I could close this for around $1,800. The reason that I built this is because IBKR, which is the brokerage that I use and I love, doesn't show these trades very well. So let's take a look at what this trade looks like in IBKR. So right now I am long. We'll just build the whole thing here. What else am I long here? These are just 65, so $15 wide, and then I've got these wings, and then the original $50 wide wings. I'm just gonna put in the original trade here, or this is the base trade that's in right now. I'm gonna enter this. This is a credit, $10. I'm going to submit. And then the other portion is 2 of these guys that are dirt cheap now. Not looking for that move at all. I'm looking for it to stay in range. And what was my other long? It was 35.65, so it'd be 40.15. I'm going to buy one of those. All right, so we're going to submit that. We're going to buy that. And that filled. And this one has not. We're going to drop this credit to 935.
Autofilled.
Okay. So let's look at the risk navigator here and see what this looks like now that I have this position. So this is what it looks like in my account. I've got an iron condor on and I've got a long put, but you'll see in the risk navigator that this trade looks just silly. I'm going to go to portfolio tools, risk navigator, open my portfolio. This is in a simulated account. If I just go to SPX, we can look at what the chart looks like for this particular trade. Now, I'll enlarge this so we can see this a little bit. But this is what it's showing, which is super unhelpful. I don't know why, with so many people doing zero DTE trading that IBKR can't come up with something a little bit better than this, but this is what we're forced into. We're forced into this little chart that looks like nothing. You can't see any detail. 25,000 is the first strike line on here. And so with that in mind, I was trying to make adjustments to these trades and I just couldn't. I was unable. Didn't matter how crazy I got with it. Now, the fun thing about this is I can actually manipulate this and I can just continue to manipulate along. So let's move this down and out of the way here for a second. And let's say we put on some other trade. What if I think now that the market is going to run down and it's going to trade under 39.50? Maybe what I should do is I should give up some of this profit tent to the top side because my assumption throughout the day has changed. And I think that the market is going to drive down. Can I adjust this now that it's a free trade to even make potentially more money? Let's take a look at what we might be able to do. So we're looking at March 28th, and say I wanted to target 39.45. Maybe that was the range that I wanted to put on. Now in this case, what I'm not showing here is the position. So let me just add that. I'm going to right click. I'm going to go insert column. I'm going to say position in PL&L, and I'm going to put position in here. So now we can see which positions were long and short. And this should match to my spreadsheet. So if I clear this off for a second, you'll see I've got two of the 39.15s, one long of the 39.50. I'm short put the 39.65. I'm short the call, and I'm long the 39.80, and I'm long the 40.15. So I've got one short and two long calls. I've got three long puts and one short put. And let's just go back and look at my spreadsheet and we will see, because it should be identical. So we've got two long, one short. On the call side, we've got one short and two long. I've tried to design it so that it's like visually what we're used to looking at when we look at an option chain. Totally different color scheme. But that is what we're looking for. So I know that I'm already long the 39.50. What if I thought that the stock was going to go down here to 39.45 or it's trading at 39.56? What if I thought it was just going to drift down to 39.50? Well, we know that the calls and the puts work the same on both sides. So if I want to create now a butterfly to this side, I can do that. I can sell two of the 39.50s. I can buy a 39.55. And I can buy a 39.45 on this side. Let me see what that's going to do. I'm going to sell two of these, and this is going to create a call butterfly. It's going to cost me a small debit to do this. Total net debit of around 65 cents. So we've got some numbers here. We're going to plug in, we're going to call this 1470, 1060, and 730. Let's help me remember those numbers. So go back to the thing here, my sheet, which I haven't named yet. And we're going to say, we know the stock is trading at 39.56. We're going to do some calls. We're going to do the 39.45 call. We're going to buy one of those, and it's going to cost us a debit of, what did we say, 1470 minus 1.64. And you'll see there's some nice little coding in here. If you, that's not working. Oh, no, that's working, because you can have a zero. You can have a zero fee. I don't know who has zero fees, but I put it in there for zero fees. What this will do, it'll show you a partial entry if you put a positive number in here. So that's what I was looking for. Negative 1.64 is what the commission would be for me. And then I'm going to sell two of the 50 calls, 39.50s. We're gonna sell two of those, and we're gonna get $10. What did we say? 1030. for those, and that's going to be $2.40. That's going to give me an error. See, the sheet helps me already, $2.40. And then we're going to buy a 39.55 call, and we're going to buy one of those, and we're going to pay. I do see that you guys have questions. I'm going to continue on this train of thought for now. So I'm just confirming these prices. So they've moved a little bit. So we've got stock trading at 39, or the index trading at 39.58. We've got 16, 12.10, and 8.65. So let's just plug those in. So we're going to go -16, 12.35, and 8.10. This is partial entry. We have to put in a -1.64. What we can do now is it's going to simulate the new position. It's going to look at this and calculate out the potential profit for this. Now this is showing partial entry. It's saying, well, something's wrong. It's red highlighted. Well, because what I'm doing here is I'm buying a call here, and I'm showing that I entered it for credit, which is a lie. I did not. This is going to be a 10 debit. So in this case, you can see now how this affects my profit loss chart. If the market goes down to 39.50, instead of this being closed for a loss of $350 or a gain of only $300, I am potentially making up to $850 if that was my assumption that the market was going to drift down. But what I've done is I've changed my potential profit up here. I've changed this profit tent. I can really manipulate this. So in this case, I'm paying 810. Well, what if I was having a very, very bearish stance at this point, and I just thought, oh boy, everything's going. What if I buy a further call, add a bit more risk by not putting in this $500 here? What if I do the 39.60 call? That will actually cancel out my other call, so I can't do that. It will cancel it out, or I could maybe buy inside of it. Maybe I'll buy the 39.70 for $1.75 instead. Let's take a look at how that affects the profit profile. So I'm going to do the 39.70, and I'm going to say -1.35. And now I have added some risk to the top side. If the market recovers from these levels, I'm putting myself in a potential loss zone. But maybe that's what I want. Maybe during the day, that's what my assumption is. Now, it's not going to say in here that I have congratulations, I have a risk-free trade. It now says maximum potential loss. I see I have a spelling mistake in there too. Let's change that. Maximum. Good thing I haven't released this sheet yet. Maximum potential loss of -$466. But what I've done is I've created a potential max profit zone of $1,500, or I could make $1,000 even if the market sells off to the downside. So this is where this increasing complexity really comes into play. Let's just do a 39.80 and see what that does. See if we can play with this and find a sweet spot. What was the price of the 39.80 right now? 39.80, if we were, sorry, not the 39.80, the 39.60. So we're gonna call that 470 for the 39.60. So 39.60, and that's gonna cost us 470. We'd be putting a little bit of money in here, but we would be, now if the market sold off, we would make $698 today. If the market went up, I would still make $200. I have a potential max profit of only $1,700, so I've decreased my max peak a little bit, but I've put myself in a range right where the stock is that I would make $1,198. Cool thing about this is I've got this kind of what if calculator. So if I just click on this, all I have to do is it's going to simulate closing all the trades, and it's going to use this price right here to calculate out all of the closing debits right here. So you're going to see what the closing debit is, basically. Yeah. Doesn't automatically count for fees. You'd have to manually put those in, but would show you that the put, this short 1965 put, if the market closes at 39.56, is going to cost $837 to close. this new call spread that I'm putting on, one of them would have a loss. This trade would have a loss of 438. This trade would have a loss of 471, and this one would have a profit of 1141. So this trade would actually be more profitable if the stock stayed at 39.56. So this is where having a ridiculously complex sheet, and like I said, I made it ridiculous. Let's scroll down. It currently has 142 entries. So you could do up to 142 adjustments on a day trade with up to 124 legs on a cash settled index, and you can just build this trade however you want. It just kind of grows like a giant. Which comes to the name. I think that this is a trade that I am going to be putting on. It's a multiple adjustment trade. The sheet itself is so powerful that I kind of want to name it. So I've been tossing around some names and I would love your feedback. So get ready to comment, because here's some of the ideas that I have. The Dragon Wing, the Green Giant. Boy, maybe that's not the name because I can't even say it. The Green Giant, Dragon Wing, or the Green Dragon. Those are kind of three names that I've been just tossing around, and this is all pretty fresh. I mean, yesterday was the first day that I was really able to encapsulate the value of this sheet and put it to use and actually make money, which was fantastic because I made a nice $1,100 win yesterday because of the sheet. And now today I've already locked in a minimum win of 300 with a potential maximum of 1,800. And I'm not stressed at all. I'm sitting here doing a live stream with you guys. And that's, that's how simple it is. But if you don't have the tools, you can't actually make the adjustments. How do you get the tools? You become a patron. Join the chat. We've already made this money yesterday. We made the money today. I post the trades live. We do theta fairies overnight. It's just a way for us to communicate as a collective, and we can share ideas so we can bounce ideas off one another. And that's the whole idea about being in a group and being in a trading room, is that we can say, hey, what do we think? What do you guys think about banks right now? There was some discussion about that this morning. Are we bullish from these levels? Well, yes, we are. We are bullish because a lot of the banks are in really good shape. Some of them not so much, but some of them are great. Okay, I'm going to get into some questions. So thank you guys so much for that intro. I hope that shed some light on the excitement that is happening in my world and things that are happening. Todd is asking, I don't want to interrupt your demo, but when you have a minute to answer the following questions, I would truly appreciate it. Of course, Todd, anytime. Thank you for joining. I have so many regulars. I feel like I know you guys, so it's fantastic. And hi, Looney Trader and Terry and Michael and Bigling. And thanks for the blue shirt comment. I always try to wear blue. I think it matches my eyes. Todd Pepper says, follow up to last week's question on selling a January at the money put in NVIDIA or Tesla. Fidelity does pay me over 4% on cash to secure the put and the premium received. Is this a trade you would consider? Wow, that's fantastic. Why? That's what we should do in our whole account. I want to sell all my shares. Yeah, you're getting 4% on the cash and you have a cash secured put. I love it. I love both those. I mean, of course, the risk is there. Both of those stocks are way up. There's a ton of people that are shorting Tesla. That's an easy short from these levels. Even myself, NVIDIA, I think the valuations are ridiculously high. So I have a position that will make money with a substantial drop in NVIDIA. Because I think that there could be a substantial drop, and I don't want to sit here and be saying, oh boy, that was sucky, I lost all my money. And Big Ling says, if you're saying that you can eliminate risk and generate consistent income, is that not the holy grail? Yes, it really, really is. When I finished this sheet yesterday, and it allows me to so micromanage multiple positions and just see the potential outcome. It modifies the trade because I can see where my risk is, and it's seeing my risk. I mean, I've been building charts like this for years now. So profit loss chart trading changed the way that I think about stocks, because I no longer think about how much percentage wise I'm going to make or on this swing. I'm looking at a range. What range do I think the stock is going to trade in? And if it stays in that range, can I make money off of it? And there, as soon as I started doing multiple entry iron condors, there was this kind of light bulb that went off. And I said, well, because it's cash settled, we don't have to get out of it. Well, all we have to do is figure out how to be able to layer multiple trades on top of one another. So if the market does this, we can do this to use the credit that we're getting on this portion to fund the credit on this side. Now, I didn't come up on this stuff on my own. There are some incredible people, Nguyen Chin, I hope I'm saying your name right, but on the Tasty Group options trade page, if you're watching this stream, or if anybody knows Nguyen, please send a link to this video, because I have to say your adjustments that you make to put spreads and converting them into 0DTE iron flies were the inspiration for building this chart in the beginning. Just taking those concepts of saying, well, if we're going to eliminate risk by paying this money, what if we flip that around and we take a net credit to potentially make money if the market moves back? Now, Nguyen is consistently putting on trades that he eliminates risk partway through the day, and I knew that there was a way to do it, and I wanted to be able to do it in a more visual way with multi-leg, positions, and this is what I've come up with, and it has already in the last 24 hours changed dramatically how I'm thinking about my current positions, because it's making me question whether or not it's better to have long duration risk when I can control the short duration risk as specifically as I'm able to now with this ability to chart it so quickly. Anyways, you guys saw what I was doing. You could see the profit loss chart. Once you have the tools in your hand, you're gonna hopefully see the light that I have seen. So, Neo says, hello and warm greetings from Switzerland. It's a shame you don't get more viewers. Very educational content. I often can't enjoy live, but I love to rewatch your vids. Keep rolling. Thank you so much. I don't know why I don't get more viewers. I would love it if you guys shared these. If you guys are in trading groups, please post one of my videos and say, hey, go check this guy out. I would love it if I have more viewers. But what it does do is it gives me a chance to be one-on-one. So until the channel is blown up, let's get to some specific questions. Which I already think, I think in general, if I'm getting paid on my cash and I'm using that cash to do cash secured puts, that's a brilliant system. Obviously out of the money short puts in this market, because I think that we could be in a flat market for a long time and there's lots of premium on the short puts. Neil says, glad you're enjoying 0DTE trading. Not my cup of tea, but I really enjoy following your other trades on Discord. Well, thank you very much. It's, there will be a time where I'm not doing it at all. We talk about this. There's times where you're excited about doing 0DTE trading. Even over the last month, I wasn't doing nearly as much. I was consistently doing the Theta Ferry, but I wasn't doing any multiple entry iron condor because it was just taking up too much daytime. That's one of the beauties about doing slightly less adjustments, or having the ability to make a few adjustments to a broader trade. I definitely was not enjoying doing the multiple entry where I had to be at the computer every half an hour putting an adjustment. That wasn't fun. It wasn't even fun posting that many in Discord. So Neo's saying, currently considering open an iron condor on SPY with short on the 16 delta, long $10 wide in May. Yes, I like that idea a lot. Let's take a look at what that might look like. May 12th is the next weekly that I will be trading iron condors on. I want to just roll over. Just give me one moment here. I just want to zip over to okay, let me load this up. Okay, so we're looking at Options AI, which is I'm an affiliate for. They have a link specifically. So if you guys are looking for a discount for this service, I love it. I'm using it every single day now. If you use all caps Drawbridge, then you can get a discount code. It's much cheaper if you decide to try it out. I believe there's also a trial. But what the beauty of it is that it pulls real option data. Now, if we look out in May, as Neo said, We have the May 5th. You see how we have May 5th contracts, and then we have May 19th. May 19th is the regular monthly, and I typically trade these on 45-day intervals. So today is Tuesday. I expect on Thursday that the May 12th contracts will be coming out, and I will be entering my next SPY condor at 45 days to entry with the May 12th expiration on Thursday. And I will be posting that again. I post those trades in my Discord. So as soon as I put them on, I do a screen grab of everything. I put the credit that I receive, and those are very, very lucrative trades. So let's take a look at, for now, I'm gonna do that. For now, let's look at May 19th and see what potential trades there are. Now, the beautiful thing here about Options AI is I don't even have to think about this. I just click on neutral, and it just pulls up an iron condor. So this is a risk one to make one. It's only a $2 wide, $1 wide iron condor, which I don't particularly love. 61% probability, but a massive potential return. You're basically doubling your money if the S&P 500 stays in this ridiculously wide range between 420. Which is the short call, and between 369. So 61% probability of profit of doubling your money. Pretty crazy. But we wanted to do $10 wide wings. So let's just do that. And so I'm going to pull this out. That's a $12. So this is where Options AI is pretty cool. So there's a $10 wide, 63% probability of profit, $600 max risk, $400 max gain. So very, very strategic without any effort. There you go. And this is why I use Options AI right there. That is based on the 80-day expiration, which is actually, that is not where we want it to be. We said May, didn't we? Oh. Why did I get kicked out? What happened there? Let's sign back in. Let's just try that one more time. Expire in 31 days. Let's go to the 3 month. 52 days. That'll be May. That makes more sense. 39.78. We've got, let's just widen these wings out again. There we go. So 39. Drop it down there. There we go. So there's $9 wide on one side. No, $9 on both sides. Let's go one. Slider's being touchy today. Trying to look at two different things. I don't know if there's a manual way to do this. Now that I'm playing with this, usually it's not much of a problem, but I'm having a bit of an issue. That's a $20 wide. And I can't seem to grab it. Okay, you guys are watching me struggle. We're $1 away. There it is. Okay, so $10 wide, May 19th, the 39.69, 39.79 short put, the short call at 40.10, and then the 40.20. Now, if you sign up for a trading account, you can actually just review the trade and put this on. Then it also can give us an iron butterfly as well. So if we wanted to do a butterfly, which have been fun, lucrative trades as well, you can just adjust these sliders or your top profit target. So if you wanted to be bullish, you could just move the whole thing up and say, well, I want to target a higher price, or I think the market's going down. I want to target my butterfly with a lower target range. So there's ways to do that. Pretty cool software without having to do much about it. All right. Green Giant, love it. Andrew says, great demo. Thank you very much. I'm still working on it. I've been kind of bleary-eyed with my charts. Like a lot of the things the hardest part is, well, not the hardest part. The hardest part is usually getting all the coding to work and all the color coding so that when you put in an entry that's wrong, when you're trying to like really fly at it, it just gives you little warnings and says like, hey, you missed something. Because I'm sure you guys are like me. I miss little things all the time. So my sheets have to have my back. It's the only way that I can function. Bigling says, hi, Levi. Thanks for doing these live streams. I find them incredibly useful. I have a question about rolling a credit spread. Yes, go ahead. I have a Microsoft put credit spread expiring 3/31, 267.5 and a 265 that could potentially finish at the strike price. Current price is 272.5. I don't want to get assigned, of course. Exactly how would you roll this position in IBKR and when would you want to do it? Okay, so credit spreads are incredibly hard to roll. In general, the downside of a credit spread is that the downside is that they're hard to roll. The good thing about put credit spreads is that they have built-in losses. So I typically don't roll credit spreads unless I'm doing something really fancy. I usually just record them as a loss. And I'll show you why. So we've got the 267.50 put, which is short. So what we would be doing is buying that back, and then we would be buying, or we would be selling the 265. Now, if you wait to expiration, let's just say we do. Stock is trading at 267, which, as you said, it could be. Today it's down 341. Tech is having a bit of a soft week relative to the rest of the market. If the stock drops this other $5, which it could, there's still 3 days left in this trade, this put could actually be tested. In this case, the cost right now to buy out is $40. I don't know how much credit you collected on this trade, but if I'm in a situation like this with only 3 days to go and I'm worried, and I think that this is going to go down, then I typically just take off the trade. That's what I do. I like to close early to reduce the gamma risk. Now, it depends on how many contracts I have too. If I had 10 contracts on this, then I might manage it slightly different than if I had one. If I had one contract, obviously I don't have any choice. All I can do is either close it or try to roll it. If I have 10 contracts, what I could do is just reduce some of the risk. I could say, well, I'm going to take some of this cash that's allocated here, and I'm going to put I'm going to close some of those contracts. In this case, if I was in this position, if I was short the 267 and long the 265, as you said you were, this is the position you're in. One of the things, if I was bearish and I thought that the stock was going to go down to 267, one of the things we can do is just sell a call spread here. We can sell a call spread, and what that profit profile will look like from today is it will put us into a max loss. Now, the max loss is only $29. It's actually less loss than if you paid the 40 cents to get out of the trade. But there's still potential that the trade could make money. So in this case, just buying that call spread, let's just close this off here. It's $2.50 wide. Well, I would collect a credit of, no, it is a little bit more money. I would collect a credit of $1.88. So this is about $60 I would lose if the stock stays above 373, or above 270 rather. If the market goes down, if Microsoft goes down, then this starts to make money. So my break even on this trade, you're going to see, is 269, and it will be whatever I paid. So 269.40 would be the correct break even. Then this call will start making money. So in this case, closing the put spread early would cost $40. Adding a call spread to make it a butterfly would cost $60, so cost a little bit more. The other thing you could do is just add a call spread to this side and collect the credit and give quite a wide range. So doing this little trade right here collects another $92. Well, that brings the break even on the put side down by another 90 cents, so whatever the credit collected is. And this is where you would use my rolling options record keeper to visualize what happens what am I doing if I'm adding that particular trade. But your question was rolling, so very difficult to roll, but basically we're going to be selling off the 265. We're going to be buying the 265 and selling the selling the long 265 put. I'm buying the 267.50 put, and for a net debit of 43 cents. Now let's look at the next week and see if there's any potential of rolling out. I really don't think there is, but we're going to try. So what would we be doing? We would be buying the 265 and selling the 267.50, and you can actually get a net credit for it. So in this case, there's enough downside risk that rolling out to the same position would actually garner a net credit. Now, of course, there's more time for it to drop. So if your assumption is that Microsoft's going to go down and then it's going to continue to go down, then taking a small credit and adding more time is not really a very smart move. Now, if I was able to roll down for a small credit to lower strikes, that would be even better. Well, in this case, I can. It's 5 cents I would be collecting. This would actually cover my positions, and I would be rolling down to another $2.50 lower strikes. So that would be the position that I would be looking at. But again, I think that if my assumption right now is that the market's going to go down, the real play here is to sell call spreads. Even if they're in the money, you collect $2 by doing this. You virtually eliminate any downside risk because you're adding upside risk, and you're not adding very much. You're adding $64 in upside risk to potentially give you this little butterfly. So that is one of the things that these are the adjustments that I would look at. And call spreads, adding call spreads when I'm bearish is definitely the trade to take in these bearish positions. I've been selling a ton of calls lately because there's tons of stocks that I think are just, it's not that I think that they're terrible and they're going to go down. I just don't think we have much upside in this market. So calls and call spreads are bread and butter trades right now, I believe. So I've had one vote. That's it from the Dragon Wing, the Green Dragon, and the Green Giant. That's the one vote is for the Green Giant. You guys are killing me. There's 26 people online. Please just cast your vote. Maybe you think those are all terrible names, but the idea with the trade is it just like expands exponentially with all of these little kind of fingers. And hopefully, as quickly as possible, we turn it into a net profitable trade so that there is no portion of the trade that can lose, hence the green. We're trying to just build a giant green trade. And I mean, the Green Giant kind of says it all, doesn't it? I think that's probably the winner right now. Okay. Bigling, I'm thinking I'll make the call on Friday before close. When you wait that long, just so you know, the gamma, the velocity of the change happens so quickly. So right now, right now you're getting 60 cents to close the 265. The 267, you're only paying $1. If the just before close on market day, on Friday, on the expiration day, the stock is trading just above 267.50. If Microsoft's just above this strike, there's still going to be a buck value in here of 50 cents or something considerable, and there's not going to be much value here. So you won't be getting any benefit of selling the call. The time to roll things, and the reason why you get a credit now to roll, is because there's enough time left in it. By closing this spread 3 days beforehand, you are taking advantage of the velocity change. Let me just show you. It's just all about gamma. I think that's kind of the most important thing. And a lot of people don't understand how it works. But when you look at where the stock price is right now, it's this dotted line. And where is it? Is the solid line at expiration. And it's quite substantially different. So this velocity right here, the price change from here to here is relatively rapid, and it becomes especially rapid on that last day. Kevin says, I like the Green Giant. Andrew likes the Dragon. It's funny, we're talking about like naming a trade. I'm thinking about this just in general, like talking about naming a trade that is like so ridiculously complex that there's no parameters for it. You're just kind of like throwing chunks of SPX trades at it to try to balloon up something. So it's kind of funny to even think that it would have a name, because normally when we name something like a humpback or a unicorn, it has very specific parameters. It's like when I enter a unicorn, I'm looking for something quite specific, looking for a very specific market move. This trade would not be that. It's just like we would have a fun name to kind of throw around. So, okay. Ask me more questions, please. What do you want me to look at? I can look up on Seeking Alpha, which is another amazing site. You know, I've been doing very well this year, and part of the reason that I've been doing well is because of some of the information that I'm getting from Seeking Alpha. You know, just being able to like look up, like this morning, looked up Schwab. You know, you can look up the dividend yield on here. We can look at the summary. You can see the past ratings. You know, look at this share price drop, what the quant rating is, which is an AI algorithm, whether or not they're profitable. We can just see all of that information at a glance. I have been thoroughly enjoying Seeking Alpha for the cost of it. And again, there's a shameless plug. If you look down below there, I don't even know what button to push here. I'm just going to push the Let's Get Rich Together button. But you can get a discount on Seeking Alpha anytime. They offer discounts. But when you use affiliate links, like I have one down below, then I get a small kickback. You get an even better price. So if you're not a Seeking Alpha member, you're thinking about signing up, at least click on my link down below, which doesn't pay me. I only get paid if you sign up. But if you sign up and I use this service, I love it, then I get a kickback, you get a better rate. So anytime you're looking for anything, if you're thinking, oh, I should sign up for something, look for YouTubers like myself and look for their discount codes, because we get inundated. My inbox every day is just filled with people trying to like get me to flog things that I've never even heard of. And it's crazy. I only ever talk about products that I use. So when IBKR, I'm going to push the button right there, which is always on the wrong side. I lean the wrong way because when I see it, Interactive Brokers is a brokerage I use for my news data. I love Seeking Alpha. I just like the setup and the ease of their quantitative analysis. It's very, very simple and clean. And then for looking for option trades, like at a click of a button, I use Options AI. That's really it. I don't have a whole bunch of other affiliates. I mean, I'm really super choosy about who I use and promote. And that's why you see when I pop open this screen, you can see I've got IBKR right here. So this is, well, that's not working. I can't use my arrow. I've got IBKR, I've got Options AI, I've got Seeking Alpha, I've got Yahoo Finance, which I use all the time, Google Sheets, TradingView, I'm not an affiliate of. I don't actually pay for their service, but I love using it. And then I've got my own website. This is kind of like what I use on a daily basis. And I'm using Yahoo Finance less and less. Right now, the biggest two are Options AI and Seeking Alpha. So I've got a question here. Rivian, yeah. Green Lantern is fun. I should, well, it makes me think of Ryan. Well, we will have a think. Maybe that's going to get added to the list, the Green Lantern. What is the SA rate for Rivian? Let us take a look at Rivian, because I don't think the rating is very good, but let us see. So it's sell rating right there. So big things that we're looking at right here. This profitability. When companies aren't profitable in rising interest rates environments, it is very difficult for companies to make a living. It is very difficult for shareholders to continue to back them and to think that they're going to continue to be innovative and be able to make money. So is it a strong sell right now? No, but it is a sell. Can you short it? Possibly. Let's look at, is there a short? This is why I use this. Everything is just here. Here's the short interest. I'm just going to clear that off for you. The short interest right now, 11%. Lots of volume. You can see the 52-week range. This was trading as high as 56. It's trading now at 12.58. It's way down. It's just been on a steady decline. And Seeking Alpha also gives us this warning. Rivian's at a high risk of performing badly. It's down 71% year to date. Now, I'm not saying that this is a terrible time. I mean, Warren Buffett says, be greedy when others are fearful. This is potentially the time where you get in on this stock that everybody's beating up and get in at a really good rate. Let's build a trade around that. Let's take a look over at Rivian and see what we can do. An ABR put. Okay, let's look at that afterwards. I just want to look at Rivian here and see if we can build something fun. Rivian. Come on. is one of, if somebody from Interactive Brokers is watching, that's one of my most frustrating things, is like typing that in and then having it disappear as I scroll down to it. So let's look at, let's go out a month. May, 52 days. We're in May already, aren't we? So is there premium here? There's going to be tons of premium. If we sell a 17 delta, 61 cents. So I'm just building a condor, just looking for what happens if I'm non-directional. Can I put on a 69% probability profit trade? No, this is textbook stuff. 69% probability, not taking a directional stance at all. Don't know if it's going to go up or down. Break evens between 946 and 1804. Stock trading at 1298. Let's look at the expected move. Whoops, wrong site. Zip over here. We're going to go click back over here. We're going to say look at 3 months. We're going to look at the May 19th, looking at $10.20 expected move. This is based on real-time option data. And this is why, you pay for services like this. We can actually see this isn't just an expected standard deviation code. This is real data. Expected move between 1581 and 1020. Well, that condor was way outside of that. Let's look at their fast trade condor. I'm going to scroll this back to 52 days, and they're doing the 20, 17 and a half, 10, 7 and a half. Isn't that what I pulled up? 7 and a half, 10, 17 and a half, 20. Exactly. This shows you how we do this. There's parameters on how we make money, and there's parameters on trades that work. The algorithms know it. We know it. We just have to apply it. So in this case, showing that we can collect a credit of 57 cents. The risk obviously is up to $200. So that the risk to reward ratio, 57 bucks. So about 25%, around 25% return on capital. Okay, and then ABR put. Why am I having drawn a blank about ABR? I'm going to jump onto ABR. And let's just take a look. My chair is squeaky today. What's going on with that? ABR. I love doing these. Sometimes when I'm going to start the stream, I'm thinking to myself, I don't feel like doing this. Then I get going and I'm like, I love talking about options. This is so great. Arbitrust Realty down 34%. How much debt do they have? It's a realty trust. I would be looking at the financials first. Total income. Where's their interest expense? Total interest expense right there. You see that big thing? How big is this? How much is what's their valuation? P&E, forward P&E is 7. Yields 14%. I would guess, this is my guess on this, that the way that REITs work, they basically have to pay out 90% of their income. When the yield is this high in this rate, I haven't seen real estate REITs paying this much since pre-2008. And during 2008, obviously you guys remember what happened, but all of those dividends got cut because it was not profitable. One of the things that are problematic with REITs in this market is that if they have too much debt, then the interest rate increase is going to kill their dividend. So as soon as the dividend gets cut, then the stock price drops. It's one of those things. It's like what's first, the chicken or the egg? So this is a dividend yield of 14%, pretty tough. When I see this kind of number, my gut from doing this for 25 years is that I see this yield getting cut based on this very increased amount of interest expense. They were December 2021, they had under 250 million and now over 500 million in interest. That was from December 22. We've seen rate hikes since then. I don't know where Arbor's, how much the debt they have and where their properties are. But what you have to do with these particular types of stock is actually go into the books and see when the renewal dates are, because that's what's going to kill us. We know that rates are going to stay high. We were historically low interest rates in 2020. If they took advantage on that and they took all their properties got renewed at those low rates and they've got 30-year mortgages on their properties, that's fantastic. I doubt that's what happened. I mean, looking at that increase from 2021 to 2022, I'm seeing that there was an interest rate increase, or they bought a bunch of properties. So whatever the management was doing that caused that interest expense, that I believe will trickle down into the dividends. Now, this is just my off the cuff, right? I can't just make that assumption. I'm just telling you guys where to look. In when you are doing research on those types of things, that's where I look. I look at the financials. I look specifically where the properties are, how much their debt ratio is, what their occupancy is, and we know that the dividends are paid out based on profitability. That dividend yield of 14 and that P/E ratio of 7, I think that there's probably more downside in that. Unless there's huge premium in the puts, I would be considering a put ratio spread. So let's take a look and see if we can find something there. We finished with Rivian, right? Let me type this correctly. Slowing down, I'm going out to May, doing the 750, and here we go. There's 2 wide strikes to do the ratio. You're getting 80 cents for the short put, which is huge. I mean, that's 8% in 50 days. But what I would really want to do is this for a credit. That would be the trade that I would want to take. So if I was getting into this, if I was assigned, and I mean, if you really wanted to like reduce the risk, you just buy another, do a 131 on that. But that would be the trade that I would want. So the break even here is 630, no upside risk if it's open for a small credit, if you can get 13 cents. So again, it depends on sizing. You know, I don't love that long 5 in there. This is a much better trade, 23 cents, but you're on the hook for 200 shares, but your break even is 622. That is incredibly low, 99% probability of profit. And at that point, unless you still have to do your research, because the stock could go down, stock could go down massively. But that's a trade where even if it went down to like $8, you make $200 profit on a $1,200 trade. It's a pretty smoke and return with a 99% probability of profit. So what do they say? How about them apples? How about them apples? That sounds pretty good. A 1-3 ratio spread on a BR. Okay, Dragon. Frederic votes for the Dragon. I like the Dragon too. I kind of like the Dragon wing, but nobody says anything about the Dragon. It's all finger-like. It's crazy what you can build. I hope you guys enjoy playing with the chart, because I'm just getting into it. What is the SPX doing, by the way? Somebody tell me. Let me just do that. We didn't even start that today. I normally do. SPX marking at 39.63. What? This is crazy. This is like... Let's just see. Let's just go over to the sheet. I know there's some new joiners, 23 people. Let's look at that sheet. Let's do a little simulation. What if it closes? So right now, this is the trade. Oh no, I messed around with this. Let's take that off. This is the trade I'm in right now. The short, the spike is right. This red line is not made up or anything. This is this data right here. It's kind of funny. I make max profit if the SPX closes at 396500. It is currently 1 penny off my max profit. So it's not going to close here. But if it did, I will have made $1,800 today because of this. It does erase the profit loss chart because this profit loss chart is actually generated off these positions. So as soon as you click that close button, it simulates all of the positions being closed. The nice thing about SPX is I'm not getting charged commission for these expired or cash settled positions. So even though it cost me $1.64 to get in, there's no fee to get out, which is wild. That was something I did not expect. So it makes it kind of a bonus to hold to expiration. But wouldn't that be awesome if I made $1,800? I mean, even if I make $1,000, that'll be my second $1,000 day in a row off of a $2,500 investment. I have got no complaints about this type of trading, and it could not have even remotely been able to be possible without this spreadsheet. So I hope you guys are excited to see it. Neil says, I use Seeking Alpha daily and love it. Me too. It's pretty awesome. Mary James says, call the sheet the Green Gambit. Ooh, that's a good one too. You guys are awesome. I love doing this kind of stuff. The Green Gambit, that's fun. Foyed, hey, good to see you. Thanks for joining as always. And Mary, thanks for joining as well. It's good to see you guys. Hi, glad to join from Value Investor Mindset. How much you estimate AMD? I feel that more than 95, we are overpaying. I would agree. Just based on movement. I mean, AMD is one of the stocks that I trade pretty frequently, but it was over $100. Let's look at, let's just zip over. I like to use tools. So let's look at the expected move. Let me see if I can type AMD. We're going to look at the 1 month move. We're going to look at the 3 month expected move. Now this is based on real option pricing. So because this is based on real option pricing, we can see that the expected move with 50% IV, we're looking for a 15.9% move up or down from the current levels. So looking about $80 on the low side and 109 on the top side. I almost always trade neutral trades anyways. Would I be getting long AMD at $94? Based on this valuation, I think it's a little bit high. Let's get a second, third, fourth opinion. We'll just zip over here and we'll look at Seeking Alpha. And one of the things we can do, revenue has gone way up. They're profitable, which is fantastically awesome. Their momentum is great. Right now, their valuation is not so good. So valuation at $94 is getting a negative. Now, you have to take into context. Seeking Alpha is looking at this from a buying perspective. So this Seeking Alpha is for very, very basic minds. I don't want to say basic mindset investors. Like that's not what I'm thinking about. Just going long, looking at stocks from a perspective of like, is it a good time to buy right now? It's a hold, but the quant rating does slide. So it is 3.33, which is just below the buy rating. Really, I think what would happen with this is if the valuation dropped, if we dropped back down into a level down here where it was still had a C plus valuation, we would be much more inclined to buy these at these levels. Where is this? Well, this back in January, it was $64. We saw that $79 was kind of the expected potential move, which is about 15% to the downside. What I do with trades like this, like how I trade AMD, if I think that it's overvalued and we're going to go down when we are in a high IV environment, I either play it as a strangle, or sometimes I'll do like a put ratio and a short call together instead of just a short put and a short call together. Gives me a little profit spike to the downside. I call that trade a scorpion, and I'm just going to set that up. I'll set up a short strangle in AMD, and we will also look at the scorpion, because I think the scorpion is kind of cool. Sorry about my squeaky chair. It's driving me nuts today. So AMD, I'm just going to click on this. 94.09 down 2.6%. Let's look out in May. Michael Walls, that chart looks like a big rubber band ball to me, doesn't it? Yeah, it's a little bit kind of crazy. I try to pack as much information as possible into those things because visually we're really only looking at one line, which is the cumulative P&L. But what I want to do always is I want to also see, well, is there a is there a chance where we could, or what is the call making relative to the put? This was the expected move, $79.110. So this puts us, the short strikes right at the expected move, collects $4.50. This is going to have probably around a 69%, well, 71% probability of profit. Max returns 457. This is pretty stock standard strangle in this IV environment. Looking at that stock price, this is a fine trade. There's another way that you could potentially do this, and that's just to do a ratio spread on the downside. So let me just show you that. I like that trade setup quite a bit. 52 days. I mean, really, I want just a little bit of volatility spike. If you're the type of person that wants to hold stocks or hold option positions right to expiration, put ratio spreads can work extremely well. I typically don't put them on at 52 days because it's a pretty long time to run a Scorpion. But you can see the break even here, $71. So way below that expected move. 113 is below, still making a credit of $300 on the max risk on this trade on the downside, which is really where the risk is going to be around $7,000. So from a cash secured amount, $7,300 trade. And I just threw that long call in there so that it would generate that number, so I didn't have to do any math. But the break even 71.73, so around $7,200 downside max risk. And if AMD drifted down to around $80, which is the low side of that expected move, then there's potential for this trade to make a little profit spike. This is a Scorpion. Yeah, fun little trade. Typically, I play these a little bit shorter. I would trade these like on a. Let's just go to April 28th and look at that. Remember, by adjusting this, I'm also changing the expected move on options AI. We looked at the May 19th. We didn't look at the expected move for April 28th. But on a trade like this, I mean, on a stock that's $94, I'm typically only looking to collect around 1% a month. The credit to open this is actually just slightly greater than 1% on 31 days and has the profit spike to the downside. 83% probability of profit with break even at 74. This is why I love the Scorpion so much. Break even on the top side, 110. That's a pretty wide range. You basically have a $35 range for the stock to fall into place. And you've got the potential, if it does drift down, that you can drift up into this profit spike. Very, very nice little trade. In fact, I'm going to pull the trigger on that here in the demo account. I'm only getting it 97 cents. I would hope you guys are getting more than that. It's going to tell me that it filled here in a second. No, I don't ever have enough stuff. So when we open this live stream, this is how these positions work so well. When I opened this, I opened it for a net credit. Well, you can see the Condor has already lost value. I mean, 0DTE trading. I've been live for an hour and 10 minutes, and in an hour and 10 minutes, this trade has made $226. I'm assuming this is in Canadian dollars. So it's made about $180 American. Now, this only functions because the market isn't moving, so that Condor only made money. These are anomaly days. The market really has been moving a lot in recent times. And this is why I've been building this ridiculous spreadsheet that we're trying to make. There we go. There we got the order filled right there. It just told us, you probably heard it, but that was the AMD April 28th position. Yeah, but this is why I've been enjoying doing this 0DTE trading. And boy, I would like to post the results in 45 minutes if the market is still trading here at around 39.64. As long as it stays above 39.60 and below 39.70, I'll make at least $1,200. But this has been a pretty amazing trade. And this is really in the last 45 minutes. We call this power hour. And as the dude in my chat room always refers to it, we try to take our risk off before power hour. So I was able to do it 2.5 hours ago already. And now we just get to sit back, have a coffee, and enjoy the sunshine, which I hope you guys are having. I don't have much more to say. Oh, let me just see here. I use Option Strat. Yeah, Option Strat is pretty amazing as well. I find, for my rolling options record keeper does what Options Chat does. It just does it in a slightly different way. So it depends on how you want to track it. Mine actually tracks my own trades and it gives me the previs both. So there's Options Chat. Every time I look at it, I'm like, oh, this is kind of fun, but I already have tools that basically show everything that I need. So I know lots of traders that use that tool, and I don't have anything negative to say about it. I just don't use it myself because I have other tools that I do use. Boyd's saying, thank you. I am long WBA. Hopefully the earnings today were not bad. How often are you doing your Discord sections, Big Link? Well, I'm on daily, so so what I do with my Discord, that's a great question, actually. I check my Discord all the time because I'm slightly addicted to it, but I only respond during North American market hours. That keeps some sanity for myself. So on Sundays when I do my Theta Ferry trade, I put that trade on as a trade alert, but I don't actually answer any questions or do anything, and I try not to read it because I'm still trying to enjoy my weekend. So I do a trade alert on Sunday evening. And if there was anything going on in the market, I might put out a little notice. But typically, I'm usually in the chat room about an hour before market open on Monday morning, and that's kind of when I start to talk to people and respond to emails and do all of that stuff for any questions that happen over the weekend. Then obviously on market open, I'm putting in my trades and I'm responding to questions as those trades get filled. Most of the actions in the morning. For when I set up my Discord, what I wanted to do was to just limit it to fairly short hours. And some days I'm more effective than others at doing that. Where I'm in, people ask questions, I respond, and then I take some breaks and I go out and enjoy part of the day. The reality is I rarely am away from my desk. I typically am at my desk from 5:30 in the morning till around market close at 1 o'clock or a little bit past 1:30. I pretty much stop responding at 1 o'clock because I'm just in burnout mode. Even this morning I went for one 10-minute walk this morning and I shoveled some food in my face 5 minutes before I started this. But other than that, I've been glued to the screen trying to get ready for this kind of stuff and just, regular questions. I get tons of emails. I respond in tons of different ways to everybody, regardless of whether or not you're in the Discord or otherwise. So the way that I function is just quite busy in general. But I'm always in my Discord around market open. Sometimes a little bit late, but typically not. Usually I'm there beforehand. So Monday through Friday, that's my Discord time. So it's pretty frequent, actually. More so than a lot of other places, I'm sure, and less than others, I'm also sure. So do I do live streams like this more often for members? So I do 2 live streams a week. So I do my public stream, which is this on Tuesdays. And on Thursdays, the stream is quite a bit different. There's questions being asked throughout the week that just get responses in the Discord server. So I don't typically jump into too many questions that are specific to these types of trades. What I do is I go over every single position that I currently have because I'm an active trader and because I share all of the trade alerts for educational purposes. When people are looking at what I'm doing, they often have questions as to why or what my directional assumption is. So on Thursdays, I go through every single position, top to bottom, and I look at positions like I would look at just like we've done. But I kind of just go through bullet by bullet on every single trade and say what my assumption is or what I'm looking at. So it's more of a portfolio recap or options recap on a weekly basis with the ability to ask questions anytime. As soon as you become a patron, you get access to that real-time sheet. So you can actually just go and view the sheet at your leisure, look at every single position, and the real-time alerts are generated from my Google Sheet that has all those positions. So it's a pretty cool service. I try to keep it reasonable. It's $50 US a month for people to join. I do enough trades that it's very easy for members to recoup that money if they're understanding of their of what the types of trades are that they have on or that I'm putting on. I see that all of a sudden we're having like a spike in viewers, which is awesome. You guys are late to join, but thank you, appreciate it. If you do have some questions, I mean, I can stay on a little bit longer because I do appreciate that people are joining. And remember to hit the like button if you enjoyed it. So just ask any questions. If you're just joining the stream, ask any questions. I'll go into the sheet and I'll pull up any stock you want. We'll look it up on Seeking Alpha. We'll look at Options AI, and I'll build a trade around any stock you want to look at in IBKR to give you an idea of kind of how I function in general in my Discord. But we're just talking about Discord right now and how I function on a daily basis. So live streams Thursdays for patrons only. And my options tier is $50 a month. It's basically a donation to me to say, hey, thanks, Levi. You're doing a great job. And then it just gives you the ability to come into a really great group of people and ask questions without anybody being dicks or anything. Like I run a pretty tight ship, and it's like I love it. I would go for beer with any single person in my Discord group. It has been absolutely life-changing for me to be able to just log on and say hi to everybody in the morning and say, this is a great group of people and we get to trade together and make some money. B-Baller. Hi, Levi. Do you trade futures options, ES options? Yes, daily. In fact, I do a little ES Ferry trade overnight. So I typically do zero DTE trades. So if you go back to the beginning of this live stream, you'll see the new sheet that I'm rolling out. But I have a certain amount of capital that I allocate towards SPX. And then I do ES trades overnight. I also do ES trades for like hedging, just because it's more capital allocate. It's better capital allocation. So Space Trip Trade is one of the ones that I would use for ES. Black Swan hedges are another one that I use for ES. Or typically I don't trade MES. And then other futures, like I almost always have a position on in CL, which is probably too big for most people's account, but you can trade MCL in the same way, which is oil futures. GC is something I trade. I don't typically trade NG, which is natural gas, but I will occasionally put on trades in like corn and soy as well. But I for most of the indices, I'm just I typically am trading like ES, CL. Those are the futures that I typically trade, and I trade them with options. I don't buy directly. I'm doing strategies on those to try for income. Todd Pepper, huge learning and great group in the members chat, worth every penny. Many thanks, Levi. Thanks, Todd, for that shout out. I do appreciate it. If you guys are interested in joining the chat, I try to give as much value as possible. So I do appreciate that feedback, Todd. You guys are amazing. I am starting to lose my voice. It's 12:23. I have got some gravel to go sort out on my front lawn to get ready for the summer. So there's a heavy afternoon of shoveling today, like everybody in this springtime season. So I'm going to bid you guys adieu. I'm going to push this button that says, let's get rich together, because that's what we're doing here. And I will see everybody on Tuesday. I'll see my patrons on Thursday. Thanks so much. Take care. Bye.